Dimension Data out with results today, and these will be the last step from the group before it delists from the JSE next month. And of course, the shares stopped trading last month on the JSE after the 24 billion rand purchase of data by Japan's Nippon, Telegraph and Telephone. With more on the numbers and the future for the group, I'm joined on the line from Singapore by CEO Brett Dawson. Brett, very good afternoon. Thanks for joining us today. I think good evening to you.
Stephen, great to be on the show.
Of course, that turnaround you reported at the halfway stage in the results appears to have continued. You've got revenue up 19.4%. That's in reported currency terms. Earnings per share up 18% to 9 cents. This time around, you've been assisted by the strength of the rand and the Australian dollar.
Correct, Stephen. We just under 20% growth in reported US and about 10 in if one looked at constant currency like for like. So if you stripped out the weakness of the dollar. So, we're really pleased by being able to grow our business at double-digit rates, which really means you've had a very strong second half of the year, which has been really pleasing for us.
I mean, just running through the regions and the businesses, it really looks like all regions performing quite well, especially Asia Pacific and the US. I think the US ahead of Asia Pacific, and also across all product lines as well.
Stephen, yes. The US for us was a massive recovery. 2009 was a tough year through the global economic crisis. Then we've been doing very well. So that business really powered ahead. We're up about 36% year on year in the US at the revenue and much more at the bottom line, but we needed to be. Performance in Asia was also extremely strong, but it was right across the world, even in Europe where we grew at 8%. I think most of the benchmarks and our competitors are growing in around about the 1 or 2% level. So we think we've taken share, and we think it's reasonably a strong and aggressive set of results.
Brett, how intact do you think the recovery is at this stage, and particularly if you look at Europe, where austerity measures are being employed across the continent, where governments are cutting back on spending, companies still cutting back on spending? Are you convinced that the recovery you're seeing in Europe can stay there?
I think Europe is. I think the market's actually quite tough. So we've grown at 8, but as I said, I think the market is maybe growing at about 1%, maybe 2. So I think growth is hard to come by, and the way we've gone about it is to try and grow market share, because the market in and of itself, I think, is still reasonably tough. In Europe, we have definitely seen a recovery in the US and in Asia. Those are the two biggest markets that were the most hit in the downturn. In 2009, so both the US and Asia, we've seen a dramatic bounce back. Europe wasn't as affected for us, and we've continued to grow, a little bit more modestly, but 8% in Europe is, we think, a strong number.
How about here in South Africa? Also looking like here, I see Internet Solutions doing pretty good. Revenue up 10.5%. Sharp decline at Plessy, and that was evident at the end of the first half that Plessy was in a bit of trouble.
Yes, so if you look at our African business, South Africa in particular, we've had a very good performance from our Dimension Data brand, very strong. We really did benefit from a lot of the projects around the Soccer World Cup. As we ran about half the stadiums in terms of all their IT in stadiums, and that all went very well. Internet Solutions grew double-digit revenue growth, which is terrific, because with the reduction in the bandwidth pricing going into the market, to grow revenue at 10 means you've actually grown volumes far faster than that, which is really pleasing for us. And yeah, Plessy has had a tough year. We did see a pickup towards the back end of the year, but for the year, still a tough place to be in the building the telecommunications infrastructure, particularly in Africa. In South Africa, Plessy did well, but in Africa, it's still been quite tough with telcos limiting their spend at the moment.
What's the outlook, though, for Africa? Because it's really your Africa footprint that was one of the things that attracted NTT to data. And we've spoken before about growth in telephony, data and IT across Africa. Is that still intact as well? Are you seeing that starting to improve?
Well, we remain completely convinced, obviously, in our story. We think that the convergence and the growth in IT and communications will continue, and that that we're positioning ourselves for that. That trend. It's been pretty much a high growth market for the last 6 or 7 years. A little slower at the moment, but we still think it's one that's coming towards us.
What sorts of competition would you expect in that market, though, because it's not just yourselves and NTT who are targeting that, it's also Chinese companies like ZTE and others who are also looking at Africa as the next frontier for growth?
I think in all the markets we involved in are competitive. In Africa, I think we did get our footprint established a little ahead of some of the other global players, and we I think have a good footprint in Africa, and we remain optimistic with our prospects there. But that being said, all our global competitors now put emerging markets, Africa one of those, on their growth aspirations. So no doubt that we'll continue to be in pretty competitive positions there.
Brett, just looking at the year ahead, of course, how are things going to change for Data now that you are part of NTT, that you are going to be delisted next month? I mean, does anything change for Data itself?
Well, for Dimension Data, we'll continue to trade as is in terms of our brand, our management, our people, the services we take our clients. Pretty much our clients would expect business as usual in the short term. And we think the tie-up with NTT was important for about 5 to 7 years' time. So we started, we started seeing market trends, which for us 5, 7 years out, this concept of cloud computing will become real, and that we needed to be a significant player in that. And so we chose to do what was right for our business and the clients, and that was to adjust our competitive position early in advance of some changes which we think are coming into the market, and which Dimension Data needs to leverage and secure those opportunities.
Well, what are some of the benefits, perhaps, that Data and benefits that your clients are going to get from this buyout by NTT?
Well, we will be introducing increased service offerings in the fullness of time. So our ability to extend our offerings to our clients, where they can get not only what we offer today, which is largely on-premise solutions, so on a client's site, if you like, but also being able to take to them the ability to offer the information technology as a service. So you would have heard of communication as a service and IT as a service, software as a service, these kind of service models. And in addition, the ability to offer cloud computing. So for a client, we will be positioned to be able to take to them the ability to offer them computing solutions on their own premise, as we do, and also from a shared infrastructure perspective, which we think is coming down the track in about 3 to 5 years' time.